Welcome to the Sharon Partners quarterly market update for the September quarter 2024. I'm Kim Hope, and as always, I'm joined by Dr. Steve Garth. Thanks for joining us, Steve.
A pleasure to be here, Kim.
Now, Steve, it seems like we started this quarter out really quite volatile, but it has ended quite well.
Yeah, that's exactly right. I've got a chart here of the US market, and not only the stock market, which is the red wiggly line there, I've got a purple wiggly line, and that's a measure of the volatility in the market. And you can see there's a big spike on August the 5th. Huge spike. In fact, it's the third biggest spike in volatility on record. So the market really was worried. They thought we were going to go into a recession. But you can also see it was fairly short-lived. The market recovered, so it did plummet by 10%. Those tech stocks particularly were down by more than 10%, but market got up its feet and thought, we're probably not going to go into recession after all. And then by the end of the quarter, the Federal Reserve cut the interest rates in the US by 50 basis points. And so the market then, as you said, we're hitting new highs by the end of the quarter. So overall, Kim, both the overall market, what we call the S&P 500, but also the high-tech stocks, which we've talked about a lot in the past, both those markets returning over 35% in US dollars for the year. So it's huge return.
Some very welcome news. And Steve, coming back home, so the Australian markets are really made up largely of financials and mining. But I understand there's been a bit of a divergence in those sectors in the last quarter.
Yeah, there has indeed, Kim. When I show you this chart, it's actually plotting out the financial sector and the materials sector, so the banks and the miners, and you see this big divergence. Now, overall, the ASX 200, great quarter, it's up nearly 8% for the quarter. It didn't really suffer that same volatility that the US did. And overall, though, for the 12-month period, Australian market up by 21%. But it's been really driven by the banks. They are up by just over 40% for a while the materials sector, the big miners, they were returning big zero. Fortunately, all that changed just in the last few days of the quarter.
Well, what can you tell us about that though, Steve? What was it that changed?
Yeah, it's a great question. So people may have heard about this, but just in the last couple of days of the quarter, the Chinese government, or the Chinese central bank, launched a stimulus package to get their economy moving. And the main point of that stimulus package was to really help out the property development and the real estate sector. Now, the biggest users of Australia's iron ore is the property sector of China. And you can see there that just in those last few days, the Chinese stock market overall up staggering 20%, and iron ore up more than 10%. And that's also boosted our miners to be up by more than 10%, just coming in the last few days.
Very good. Well, Steve, we've spoken about bonds quite a bit over the last few years. What can you tell us about their performance recently?
Yeah, so bonds certainly had a bit of a whack back in 2022. That's when interest rates went up really quickly, probably as fast and as high on record. And that really knocked around the bond market. But what we're seeing now is those yields have stabilized, or the interest rates, if you like, have stabilized. As the interest rates starting to come down, the bonds are starting to go up. So in the chart here, we're plotting the bond yield for the US government. And next to that, we're putting the return of the bond market in Aussie dollars quarter by quarter. And you can see in the last quarter, as those yields are coming down based on the interest rate cuts, but also the expectation of future interest rate cuts, then the bond market is going up. And in fact, it's returned a massive 9% for the 12 months period. And the Australian bond market, also very good, returned 7%. So it's been a lesson in patience, Kim. It was hard work for bonds for a few years, but they're really earning back now. They're on good behavior now.
And that's some really welcome news for our investors, Steve, but it also really drives home this last point. We'll finish as we always do. At Sharon Partners, our investment philosophy is very much that you really can't control or time the markets, and it is important to maintain a diversified asset allocation and participate in the markets in all the market conditions that we're going to see. Steve, thanks so much for joining us and giving us insight as you always do. We'll look forward to seeing you next quarter.
Yeah, terrific. Thanks, Kim.